First of all, let's see here. All right, cool. Hopefully by the end of today, we'll be able to answer these general questions, and we'll be going through them in this order as well for those keeping track at home. Introduce ourselves real quick. My name is Ryan. I work with Strategics Consulting. We're a federal lobbying firm with offices in North Carolina and DC, really specializing in local government advocacy. Born and raised here in North Carolina myself. I went to law school right down the road, North Carolina Central. I've worked for Congress. I've lobbied in-house on behalf of the industry. And for the last year, most recently, been working for.
Okay,
They're asking to get closer to the microphone. I think they have.
maybe mute the TV and turn your mic on. Okay. Just wait 1 second.
Okay.
Yeah, as long as you get it working right, it's great. Yeah.
Can everybody hear me now? From people at home?
Yes. Yeah.
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 Okay.
Good to go. There you go.
Thanks, George. All right. That's me. And I'll throw it over to Laura to introduce yourself.
Good afternoon. My name is Laura Combs. I'm with Eagle Solar and Light, and we are a commercial-focused solar installation company. And I do a lot of work with nonprofit communities, local governments, underserved communities. I'm an urban and regional planner with an environmental planning specialty by training, and working really hard to help local governments and nonprofits access the Inflation Reduction Act funds.
All right, why are we here? This is elective pay, also referred to as direct pay. So we're going to use those terms interchangeably throughout this presentation. Essentially, right there it says makes certain clean energy tax credits effectively refundable. This is open to local governments to take advantage of the Inflation Reduction Act clean energy tax credits for the first time. So it allows nonprofits and local governments to take full value of the credit. Right there in the second portion really sums it up with the list of specific localities, so states, local governments, nonprofits, and then subsectors of those. So even public utilities, libraries, schools as well. And this is the first time in history that this benefit has been extended to local governments. More on local governments. Cities, counties, and other political subdivisions is the exact language from the statute there in the first half. Can we make the document bigger?
They're asking if you can make the document bigger. Oh, okay.
Is it just one of the squares? Can we make it the main?
Yeah, I think it's the main square on my screen. Yeah.
Okay.
Let me just put in.
Well, we'll have
Continue. Yeah, I was gonna say, continue with your presentation. They can work on making it bigger. And also the slides will be distributed afterwards. So everybody will get a copy of the slides if they're a little hard to follow today. So everyone in the room and everyone attending remotely will get a copy of it.
And we are recording this, by the way. I should have said that before.
So we'll have the recording, we'll have the slides, and we'll have frequently asked questions as well, which are super informative. One big aspect here to keep in the background and for context is this federal funding vehicle will be used in combination with IRA grants, BIL grants, and that includes bridge funding, for example, and loans as well. So I think it goes within the spirit of both of those major pieces of legislation that they didn't want to federal government didn't want to extend the tax credits while also diminishing the value from the grant. So and then a general rule of thumb is that the credits, and we'll go into specific examples later, but the credits can be used in combination as long as they're not more than 100% of the actual project at issue. Okay, moving on. Timeline. All right, so elective pay or direct pay was enacted by IRA back in 2022. The proposed rules that we're working off of were published June. Of course, we're here today, and then we will be expecting much more clarity in the next month and a half in December if the federal government sticks to timelines, which they are known to fudge sometimes. Generally, what areas or what types of credits are eligible for local governments? Out of the 19 clean energy tax credits, 12 of them, so over the majority, are eligible for elective pay or direct pay. Most pertinent to local governments will be Section 45 and 48. We'll go into those, but the two bifurcated areas or sections for those will be the production tax credits, which have the 10-year project-based span, which you're able to claim once throughout that 10 years annually, versus the investment tax credit, which is a single-time, single-use tax credit based on the project itself. Okay, here are those eligible tax, those credit project areas that are eligible for elective pay. The red items are the ones that are most relevant for local governments. So those are going to be the ones that we're including in the FAQs, and the ones that we should keep in mind as we go through. And then the bold items are the ones that are new under the IRA or significantly extended under the IRA. So we can see here that the investment tax credit section is much more relevant to what we're discussing today. And then Laura will go into this a little bit more, but that's due to the production tax credit for the renewable for Section 45 is at the utility scale, so over 1 megawatt, which we don't see a whole lot of government buildings pumping out that amount of clean energy. So yeah, any questions on those? All right, moving ahead. All right, so for the 4 relevant credit areas I wanted pertinent to local governments, I wanted to break those out individually. The first one is Section 45. These are going to pertain to energy and carbon, energy generation and carbon capture. So examples would be if you have an investment in electricity generation from renewables, that includes wind, biomass, geothermal, solar, small irrigation, landfill and trash, hydropower as well. Down beneath the description, I have the calculation for those credits. I went to law school because I'm not so great at math, so I can't really explain those for you. But Laura has been doing that on her end, so can't wait to throw it to her. This next item here, again, is generation, and feel free to jump in anytime, Laura. This next item here is, again, for investments, energy property, very much along the same lines of the renewables there. The third item here would be the clean energy investment tax credit. Again, still staying within the energy generation and carbon capture heading. And then the item I'd like to pick out here would be the technology neutral tax credit. So energy source agnostic, which is, I think, a big aspect of the clean energy transition. I think in general, the writers of this legislation really wanted to put it on to the local governments of, all right, if y'all can figure out a path, then we want to support that. We're not really picking falls and strikes as far as making you go a certain direction with the clean energy tech that you use. And then this last portion, this last fourth one here pertains to vehicles. We're seeing a lot of interaction with this from who we're working with our local government clients, and again, purchase for clean vehicles. We're seeing the math is a little bit easier for this one as well. So I appreciate that. This is a working example of the fourth, and this is IRS official, so this is approved language. This pertains to the clean energy tax credit. It gives an example here of a school district, again, being an eligible entity, making a purchase of a school bus. In the first part, you'll see the analysis of the reduction in the amount so that it will equal the 100% of the clean energy project that they're going after. And then in the second version, under the now assume, you'll see that the grant funds that they were awarded were a little bit less, but with the addition of the clean energy tax credit, it works out to be the same value to the school district. Okay. Application process. We're going to learn more about this in December, but really wanted to. One goal of today's session is to try to help folks with the practicalities of this, because this is a new world for for filing entities that haven't had to do this kind of thing before, plus the intricacies of applying under the different tax credit properties. So these do not have to be specifically in the order that they're listed here, but all four do need to be met. So identifying and pursuing the project or activity, you really need to have an articulated description of the project that you're going after, meets bounds data for that project. Second is determining your tax year. This will be dependent on this is actually a little trickier than it seems, but we have FAQs that'll help with that. Application process continued. Again, these are the other two steps that we'll need to complete. Pre-filing registration. This has to be completed whether or not you are going to use the electric pay benefit. It cannot happen without it. So this one should actually be underlined if you're following along at home. Number 4, be satisfying all eligible requirements for the tax credit. Again, there's going to be additional hoops from the IRS given the specific category that you file under. All 4 of those need to be met, not necessarily in that order. More on pre-filing registration. Again, you'll need to have a lot of information up front. So if you have your projects planned now, make sure that your documentation is really squared away for those items. If you are contemplating projects, make sure that you can get access to the information that's required. And again, here, my point on the pre-filing registration, the result of it is there. The IRS will review the information and will issue a separate registration number for each applicable credit property for which the applicable entity or electing taxpayer, so the local government, provided sufficient verifiable information. So even at the pre-filing stage, just to register, you really need to have a mature data set and description for the project that you're going after. Here is DOE's application overview, step by step. The login.gov being the first step is actually not live. That is something that we're looking to have more information on here in December. Again, there is a review process, so almost I would liken it to a pre-audit almost, I would say. placed in service requirements. Laura will speak to that a little bit more here. Coming up soon. Speaking of Laura, we'll throw it over to her.
Okay, so that was a lot of information in 14 slides. And everybody should just know that the federal government is doing a really good job of explaining what you need to do to get through these processes. Oh, goodness, thank you.
Sure.
And for example, I have written 3 federal grant applications on behalf of clients from underserved communities with the Inflation Reduction Act. Those are lengthy applications. The federal government has been wonderful with step-by-step instructions, and they're doing a really good job right now putting out step-by-step instructions. The previous slide you saw here, I pulled off of a federal government webinar, a DOE webinar. If you go to my company's website, eaglesolarandlight.com, and go to our blog, you will see that there will be links to these resources, to these webinars, and updated federal government instructions. So don't panic when you just heard a lot of stuff that maybe you have not dove deep into yet. I do also want to mention about the PTC versus the ITC. The PTC, based on the RE Plus, which is Renewable Energy Plus conference in Vegas this year, PTC is really for utility scale installations, not really rooftop, not stuff under a megawatt. The federal government, in its really good communication, and yes, I am serious about that, has laid out examples of PTC versus ITC. And it's clear that ITC is what is going to be important for most tax exempt and nonprofit entities. So even though we're giving you that big picture of the legislation, my recommendation is to focus on the ITC. And so the ITC, the investment tax credit, now was previously available only to corporations. Now it's available to tax exempt entities. And it's a 30% baseline. That's a dollar for dollar reimbursement from the federal government for funds that you spend on solar, on batteries. If you spend on wind, I don't think many folks here in the Triangle area and surrounding counties are going to, but the federal government reimburses 30% dollar for dollar. You have to be prepared to fund that money up front though, because whoever your contractor is going to need to be paid. If you're located in certain geographic areas, and I'm going to show you in a slide in a moment, you could be eligible for a 10% low-income community adder. That's known as Category 1 adder. There are 4 categories total. Category 1 is low-income community, 10%. Category 2 involves federally recognized Indian tribes. We have 1 in North Carolina. That's the Eastern Band of Cherokee out west. And then we have 8 state recognized tribes who unfortunately do not qualify for any of this additional money and have to, battle it out with all the other nonprofits and tax exempt folks. So Category 3 is low-income residential building adder, 20. And it has some parameters around it, requirements on how that benefit is distributed to residents, that kind of thing. In Category 4, that's the low economic benefit. So federal government has done a great job laying out all of those details. I'm not going to go through them with you because it will just, in my opinion, be somewhat painful and too much information. If you do receive one of the adders, 10% or 20% adders, you have 4 years to place that project in service. And then there are additional adders known as energy community adders, which are 10%, and domestic content adders. And I'm going to go through those right now. So, sorry. Okay, my slides are a little differently ordered. So the 30% baseline, again, applies to nonprofits, tax exempt organizations. And this 30% baseline direct payment or elective payment requires that nonprofits have domestic content requirements the federal government has laid out. They do not make the same requirement of commercial entities, only nonprofit and tax exempt folks. There may be waivers coming because right now, for example, we do not have, to our knowledge, any domestic content solar panels that would meet these requirements. In 2024, theoretically, as you can see in the chart, manufactured products like solar panels should have 40% of their components being domestic content, but we don't have that. Hopefully the federal government will create a waiver process. So stay tuned, because they've been really good about developing these materials as needed. This is a huge piece of legislation and a lot to implement, but they are getting it done. So I suspect in 2024 that if your domestic content is not met, that you will not lose a percentage of direct payment. In 2024, if you don't have domestic content, supposedly your direct payment drops from 30% to 20%. By 2025, I suspect that the domestic content that we need in our manufactured products like panels will be up and running, hopefully, and you have to start meeting those requirements. And if not, you can see that your direct payment drops to 15%. If you don't have domestic content requirements met by 2026, you cannot get the 30% baseline direct payment bonus. It's not a bonus, direct payment baseline. So now to the low-income communities 10% adder, the category 1 folks. This is only available through 2024. There have been a number of good efforts by non-government entities to create tools to determine if people are eligible for the 10% adder. The Department of Energy has now put out a tool that is the tool you should use, and I'm going to show you in just a moment. And it's important to use that tool because there are more areas that qualify for the 10% low-income communities adder than we previously knew. And right now in 2023, we are in a prime application window. So folks who have their solar proposals figured out, they've done their interconnection applications with the federal or with Duke Energy, and are ready to move forward. Right now, this period through November 18th is the time for them to apply, and they will be treated in a as kind of, they've all applied at the same time and treated equally. And if the 10% adder amount is not oversubscribed, then they'll all get it if they meet the qualifications. If it is oversubscribed, then the federal government will hold a lottery to figure out who gets that adder. If it's not oversubscribed, then there will be rolling applications after November 18th. And it's important because to note that you cannot put a project in service before the federal government notifies you that you've been awarded 10% bonus for being in a low-income community census tract. So a couple of important timelines here. You can see this is another slide that I pulled off of that Federal Department of Energy webinar. Again, it is a great webinar. You can stop it, take notes, listen as you need to, link to on my company's website. And this just gives you that good overview of how this 10% low-income adder will work. And then there are maps, and you can, well, there's a link to our blog. Eligibility depends on location, and I picked a location just to show people how this would work. And anything in green is eligible. And if you go to my blog, you will see a more detailed discussion of how this works. But you can either put in an address or zoom into an area and start to figure out what is eligible in those areas. And when you do, the federal government pops up with an outcome of, yes, you are eligible. If you are not in one of those green areas, then you're just not eligible, and their mapping tool doesn't give you any information. And urban regional planner that I am, I'm always curious who qualifies for low income territories, and it's a whole bunch of North Carolina, sadly. And then there are some additional sifting criteria that are environmental justice criteria that show up in those purple colors that help the federal government rank those applications. So category 3 and 4, low-income community adders, 20%. Again, the application window is now. If it's oversubscribed, there will be a lottery. If it's undersubscribed, there will be rolling applications accepted. This is great for HUD properties, and the project, again, should not be placed in service until you're notified that you've received the award. So category 3, category 4, 20% adders, HUD properties, USDA projects, VA projects, and then there are a few other projects, and I hate to say that they're minor, they're just not as prominent in most of our awareness. It's usually HUD, USDA, and VA. And then category 4 projects, there's formula, and it has to do with median family income. And I'm just going to punt to the DOE and their frequently asked questions because they do a really good job with that. So in North Carolina, the Department of Environmental Quality and the North Carolina Clean Energy Fund applied for a big federal grant called Solar for All, and that's a $250 million grant. They originally applied for $400 million, but they were notified that the max they would receive is $250 if they receive it. That money is intended to assist with low-income housing access to solar energy. It'll be awarded late summer 2024, and 3 focus areas: single-family housing, multifamily housing, and community solar and energy storage projects. In North Carolina and Duke Energy territories, community solar is not economically attractive. In a lot of the electric co-ops, it's not economically attractive. So that item number 3, it'll be interesting to see if we can figure out a way to finally get community solar going here in North Carolina in a more effective way. And leveraging those funds is going to be critical. And I've been on a number of calls and discussed with North Carolina Clean Energy Fund folks about different ways, or their role, the Clean Energy Fund, which is North Carolina's first, I guess, green bank, kind of along the lines of a CDFI, a Community Development Finance Institution. The North Carolina Clean Energy Fund's goal is to help mostly underserved people access funding so that they can make clean energy, weatherization, energy efficiency, those kind of things accessible. And leveraging those funds is going to be critical. And one of the items that they lay out in this process, if they get these funds, is lease options. And that's one of the things that makes my company unique. Eagle Solar and Light was the first company approved by the North Carolina Utilities Commission to offer solar leases. And we, in partnership with our funding partner, SunWealth, are the only ones with executed solar leases. We have over 40 executed leases in North Carolina, and we find that nonprofit and tax-exempt folks can have a lot of interest in leasing because it takes away the need for a heavy upfront outlay of capital. So I'll leave that off. So if you think about it, let's say that you qualify for a 10% adder because you're in an energy community, which you'll see that some of the folks in these territories are in energy communities here in the Triangle. So you get a 10% adder, 30% direct pay, that pays for 40% of your installation. That means the local government has to come up with 60% of the cost. Well, with solar leasing, the local government needs to come up with 30 to 35% of the cost, and then the lease cost is less than the utility savings in most cases. So there's a lot of interest in leasing. We're still working heavily in that area, and it is another option, and one that Solar for All folks will be looking at using. So for your HUD housing, low-income housing, that could be a good avenue. Energy communities, brownfield sites are eligible for a 10% adder. There are census tracts with coal-fired electric generating facilities or retired facilities. And we do have that here in this Triangle area. And anybody who's in an energy community, if they're going to install solar energy, must use a solar installer who meets DOE apprenticeship and wage requirements. And you can see I've listed those there. Happy to say my company meets those. And so, planner that I am, energy communities, you can see here in North Carolina, and this is the community that is near Sanford, Pittsboro, west of Apex, that qualifies for the 10% adder. And then some of this area will also qualify for the low income adder. So if you've got government facilities in these areas, this could be a very strong place to look at funding solar. But again, you have to keep in mind that you need to come up with that money up front. Your solar installer needs to be paid up front. And then the federal government will reimburse you on the back end. So the domestic content adder, again, as I said, for nonprofit and local governments, that domestic content requirement is necessary to maintain the 30% direct payment. But that also gives you the opportunity to take advantage of the 10% adder because you already have to meet it anyway. So chances are good, once we have enough domestic content, that y'all will at least have a 40% baseline of federal government payment for your energy projects. And that's just the table laying out the timeline again. And then here's an elective pay calculation example. So let's say there's a 100 kW solar rooftop installation. So the solar installer needs to be paid $200,000. The federal government will pay $60,000 of that, provided you meet the domestic content requirement. And if you're in the low income area, then that's another $20,000 payment, 20% or 10% of $200,000. 10% energy community adder is another $20,000. And then, as I thought it through just now, you're already meeting the domestic content requirement, so add another $20,000 onto that. And in this example, the out-of-pocket cost would be $80,000. And the battery's getting ready to die in this computer. So they call it the race against time, and this was a really great post that was written by Columbia University. And they talk about how tax exempt and nonprofit organizations have got to get things moving by 2024 to maximize all of the opportunities under direct payment. And again, it'll start ratcheting backward, and it's a domestic content issue that's driving that, as well as the fact that the low-income communities adder will only be around through 2024. So real quick, a look at solar leasing versus purchasing. And this will be in the PowerPoint that you guys will receive, but leasing costs less upfront, utility savings are greater than the lease cost, operations and maintenance is included, minimum production guarantee is included, and cost of removing the system is included. So leasing can be a very powerful tool and pretty headache-free. And I think that's about it. I'll pass it back to Ryan.
Okay. Thank you, Laura. So that kind of concludes the educational portion of it. I think got a lot of information really quick there, but we will be providing materials for backup moving forward. I guess the next few points we have here are just what are the practical considerations that we need to take home to our city councils, town councils, and try to figure out what's next. How do we need to be planning now, not only this next year, but the next 5 years, next 10 years? What's our long-term plan look like? So what's immediately next, what we're looking for, and the final rules of that'll be out in December. Again, more on the registration process as demonstrated, not only the registration, but the pre-filing, multi-step, and you will need to have a plethora of data ready to go for signing up and getting squared away. Thing two would be claiming direct pay on amended tax returns. Again, I think this goes to the bigger point of being newer to this, or brand new if you're a local government, but some nonprofits just haven't really gone through the process yet and might miss one window for tax filing. So we're hoping that they're going to address that. The IRS will address that in the December final rules about opening up the aperture for amended tax returns as well to benefit local governments, kind of getting up to speed with this sea change of a program. Next one here would be direct pay for partnerships made up of eligible entities. Again, it would be great if local governments could partner with folks like Laura and other nonprofits to work together on a partnership as written now in the rules. It's very much geared towards for-profit entities and entities as a partner. So the whole corporate personhood, philosophical debate, I guess. But hopefully they'll open up to have partnerships for not only local government to local government, but local government to nonprofits, and we're monitoring that. And then again, as Laura underlined, the domestic content bonus and the phase out for it under the investment tax credit. We hope that there'll be a little bit more exceptions based on supply chain and the realities of supply here in America for some of these things that we want advanced manufacturing, we want to onshore operations, but given the timeline, it's hard to get factories up and moving in 1 or 2 years, right? Next would be again, this would be the internal conversation within your city hall. I think the big item here would be timing. So Laura spoke a lot about placed in service and really having it within the next 5 years if you're claiming it. If you wanted to speak to maybe these first two bullet points, Laura.
So if you are not going to be involved with any low-income adders, the project has to be placed in service before the federal government will reimburse you. If you are going to be involved with some of the low-income adders, you need to get those allocated to your project before your project's placed in service. So right now, if a project were applying in this first window for low-income adders, and they were to have installed solar, they will not have turned that project on because then it will be placed in service. They would be waiting to see, do we get the 10% awarded? Is there enough capacity to award 10% to everybody? Do we qualify? Once they're notified they qualify, they'll be turning those projects on. So you want to be sure it's not turned on if you're getting, if you hope to get a 10% increase or a 20% increase through the low-income adders. And then what's the next? Yeah, I took care of both of those.
Yeah, that's right.
Okay.
And then again, this is a point brought up by Elena when we were thinking about presenting today, and what, given the new benefits and rolling them out and the realities that are specific to your local government, how can you begin to conceptualize or reprioritize certain projects, given if you're in a locality that has an adder, how does that affect your prioritization of projects? How does it affect your 5-year plan? How does it affect your 10-year plan? How does it affect your 2023-24 plan? So with that, I think that basically.
Can I say something
please,
else
yeah.
about that?
Please,
Since we're off of
Yeah, please.
IRA. So I've been having a 2-day conversation with Duke Energy about rate changes, and it's really, you may have heard in Duke Progress areas, and I know some folks are in Duke Progress and some are in Duke Carolinas. October 1st, Duke Progress had rate changes. And if a solar customer got their interconnection applications into Duke before October 1st, it seems that they have an opportunity to select what rate they would like to be on. Although I literally, right before this meeting, got a very confusing email from the Public Utilities Commission about this. The next rate change that will impact solar and how effective it is will be in Duke Carolinas territory on December 1st. So if folks think that they want to be installing solar in next year, and they have some plans, they have some ideas of what they want to do, they may want to think about getting into the Duke interconnection process before December 1st for the possibility of having some control over what rate they will be on. But again, I just got a very odd email, not odd, it's just a difficult email from the Utilities Commission, because what the solar community was seemingly told and what is actually happening may be two different things. So be aware, if you're ready to move forward on solar and you're in Duke Carolinas, you may want to look at least getting, which is way more compelling. What I'm seeing happen to my customers in Duke Progress right now is that their payback period could be increasing by a couple of years if they did not file their interconnection application before October 1st.
Yeah.
However, this email from Duke, or from the Utilities Commission public staff, is quite confusing, and I think we're all confused, and 2.5 hours on the phone with Duke, they were confused as well. So just know December 1st is a big deal, and I'm trying to untangle it. That's the end of my story.
All right, I don't know if you guys can see this, but it's our contact information here.
No, I think you need to share your screen. Yeah.
I'm kind of afraid to.
I know, right? Just know the contact information will be included in the edited format, right?
Yeah.
Yeah. I think you're fine. You don't need to pull it up.
Okay. And with that, I guess we'll open it up to any conversation points from folks in the room other than the previous slide. Or if there's anybody online that has submitted questions, we'll give it a moment.
So for clarification, and for me, no, bring it back. So if we have a project that can qualify for the 10% low-income communities tier, that one needs to be applied for first in the first, I guess, wave of applications, correct?
Yes, if you have a project that's ready to go like right now,
So then that would go in this first window, and then we go again once December, once the portal opens up for the baseline and any additional adders.
correct,
Okay.
yes.
And then I've been confused on timeline of projects. So for like a solar install project, for example, for the, let's say, or to be applicable for the baseline 30% plus 10% for low-income communities, 10% for energy producing, it falls in that territory. That is just a one-time for the cost of install at the end of the project, correct? It's just a one-time payment at the end of project completion? Or
If I had to guess, I would say yes.
Okay.
But we don't have those rules out yet. The federal government will be releasing all of that, and it would make sense that you would get it at once because you're going to get your federal ID number in December,
Right.
so you can file your sort of tax return. And it seems like they would pay all that to you at once, common sense wise.
And then for organizations that are tax exempt, do not file taxes, we get that federal tax ID in December when we're applying for the project. So I was under the impression and from previous presentations I've seen, we apply each individual project, will have its own individual ID number, and at that time or at a separate time, we'll have that federal tax ID for the organization itself.
So that comes out in December.
Yeah.
But they will give you this number,
Yes.
and then this number will allow you to, however you file you won't file taxes. You're just
Right.
going to file some sort of a claim.
Right.
And
Like a rebate.
in January-ish, whenever the tax windows open up. And then let's say you have to, file an extension because you are running late for whatever reason. You get the same opportunity to file extensions like any commercial organization would.
And so those open up to pay taxes for the rebate. We think it's in January.
It should.
Okay.
Ryan, do you know differently?
Because I just know as an individual, we have our tax date of, April 15th.
Right.
So this would be in January.
It would have,
Or whatever.
I mean, like I file my taxes and I don't ever get an extension, but whenever our window opens up, it'll open up for
This
everybody, is
Okay.
my understanding.
Yeah. So again, the FAQs that we'll circulate are super helpful. Says my organization does not ordinarily required to file a tax return. Do I need to file a return to make an elected payment election? Yes, entities not ordinarily required to file tax returns must file a tax return to make the elected payment election. Local governments will need to submit properly completed source credit forms, a properly completed form 3800, and a general business credit or its successor, and any required return attachments and information required. So it is kind of a new filing form, but I guess in principle or in practice, very similar.
Okay.
Yeah.
And that document will be made available that you just referenced, 3800.
Correct, yes.
Oh, and here's it.
And we'll send this.
We'll send this
Yeah.
out.
We kind of went through an internal debate before the presentation today about, man, these frequently asked questions are really good, but we're right at 350. We could probably get to a 450 with all of them included, but IRS does have, to Laura's point, very helpful information with the FAQs, but we focused on the ones most specific to local governments in the pre-filing process and the registration process for what we have. But I do encourage you to go to their website and check out the full list.
And I will say too, like, you know, I knew that ITC would be most likely the best credit for y'all to pursue, but I didn't know by how much. And so I just did a quick search, ITC versus PTC, IRA, federal government. And sure enough, DOE has a whole scenario, and it's really clearly done. So you can search, you can just do a quick Google search, and the federal government pops with a good answer almost every time. And I've written rules, I've written statutes, I've done all kinds of stuff. And I gotta say, I really admire the work that they're putting into this.
Yeah. IRS has really great search engine optimization right now. So, yeah.
Thanks to, probably thanks to the Inflation Reduction Act. right?
Yeah, probably. Did we mention, I might have missed it when I went out, so I just want to make sure, the time frame that we know these are through? I know it's 2023 through, how long?
Through 2032.
Yeah.
So a lot of time. And then, you know, if you do qualify and get approved for adders, you've got 4 years to use those. So, you know, you might get qualified for a 20% adder, and now you're like, well, heck, I gotta wait. Solar for All is getting awarded next summer, and then they'll be notified in the summer, but when will they actually get the money? And then when will they be ready to disperse the money? So you may want to sit on your award and coordinate with the Clean Energy Fund, Department of Environmental Quality, and see how to grow the strength of that. And I will say one other thing real quick.
Please.
If in all of your work, you do at all work with nonprofits or come in contact with them, there's another massive federal grant likely to be awarded to North Carolina through Research Triangle International, and it's called Rebuilding America's Nonprofits. It's for energy efficiency upgrades at $200,000 a nonprofit, and it's targeted at low-income communities. So I've been in touch with RTI heavily, even though I don't do energy efficiency as a solar installer, because of my reach into low-income communities, and they're going to be calling on more and more people to help bring folks to that money. So just file that away.
Laura, would you mind going back to the slide where you showed the domestic content adder and the timeframes? Yes, that one.
Yes.
Okay, I understood this completely incorrectly, so I'm glad I'm here. I'm glad you put this together for us, so thank you. So for the 30%, we can apply, when you say 2023, the project had to have come on board, become operational in 2023?
Yeah, it has to be placed in service in order
Placed in
to.
service,
Mhm.
okay. And so 2024, we're talking calendar years here, correct?
Yes.
You potentially start to lose that 10% if the domestic content's not met.
Right, and I would bet that there will be a waiver for 2024,
Yeah.
but I can't promise that by any
And
means.
so is that something, sorry, is that something that, so we happen to be working with ESL on the 2 new projects y'all are doing for us?
Oh,
Yes.
cool.
More so.
Oh, you guys.
Hey,
Yay.
yeah. I'm hoping you're gonna help me through this.
Very good.
So would we lean on the contractor, the solar developer, to say, hey, because I have no idea what my domestic content is for those projects.
Right.
So we have to lean on our developers to know that information, and where do they go to in turn find out more if they need to?
I am so glad you asked that question. And anybody who is diving into this, lean on your solar developer, absolutely. We are part of a cooperative called Amicus Cooperative, and that's a bunch of people who commit to certain ethical business practices and blah, 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 and we come together and we purchase to reduce cost. And so our cooperative tracks that heavily. And I do not have my finger on the pulse of that because the people in my organization who are tracking that are like, yeah, there's nothing. So that's all I care about right now. There's nothing that meets the requirement. So yes, make your solar installer, make sure that they can tell you that they're using domestic content, especially by the time 2025 hits, but ask in 2024 too. Domestic content will likely be more costly. So it will be interesting to see how the 10% bonus for domestic content offsets the higher cost for that.
Especially with the way government bid proposals work.
Mm-hmm.
What's the lowest cost functional? I don't, but I think that just goes to the broader, I guess, best practice point of really taking meticulous notes, even down to where you're getting your supplies from, and asking those questions, and really having it ready for the IRS when it comes time to say, well, who's your vendor? Who's the contact at the vendor? How much of the steel or how much of the inputs created the percentage of the broader project? I just think if there's one best practice, I think that I could recommend would be to really take meticulous notes and really have it's a little bit of a luxury for the bigger local governments that are around, but if you're a smaller government within Central Pines and listening in right now, really push on your folks to really meticulously take those notes and have your inputs and your sources and your contact information, because people retire, people quit answering the phone, companies go out of business, but make sure you have a paper trail for sure.
And along those lines, if it's an energy community, which I know Morrisville doesn't qualify for, there is that apprenticeship requirement. And as folks look for solar installers, you may want to ask, who does your installation? Do you have your installation done with your own in-house installers? Do they meet apprenticeship requirements? Are you hiring out the installation? There are companies that do hire out those installations, and will those folks meet apprenticeship requirements? So, you want to get to know your installer and vet them and ask those questions and look for transparency and, hold them to it.
Yeah, I mean, we're seeing that writ large with most DOE programs that have the Justice 40 initiative in it, where and that has a big requirement for workforce development or workforce benefits in general. And North Carolina being a right-to-work state, and we are experiencing a lot of notoriety for being economically friendly, especially the last couple of years, being ranked towards the top in the nation. But with that, right-to-work state does come some apprenticeship complications or frictions, I guess I would say. So, yeah, it does help to know, where the grapes are grown for the wine you're drinking. You have to get all the way down to the nitty gritty with a lot of these questions.
And then the other thing I'll just throw out to you, that's in leasing's corner potentially, is that our lease, we partner with a company called SunWealth, and again, we're the only leasing game in town. And SunWealth is not bound by the domestic content requirements because they're a corporation, they're commercial. So, if somebody's like, oh, how are we going to budget our money this way? We only have this much, and we can't afford domestic content, it doesn't balance out. Well, the lease can alleviate some of those pressures. And I'm from Detroit, I'm from an auto family, I get American made, but it's not always possible, and it's not always the best solution, especially for underserved communities, which is where I spend a lot of my time. So.
And even the electric transmission equipment, I mean, there's a bottleneck on GOES, grain-oriented steel that goes into transformers. So, I mean, I think that we're seeing a big push towards trying to make domestic content, but there's just practical realities with getting them sited, getting operations out workforce, and everything else that goes into macroeconomics. But I think with that, I think we're at time. If anybody else has any questions. All right, and sorry for the cyber snafu.
Yeah.
And
Good reminder to not look.
And with that, we'll conclude today's elected pay benefits and considerations for local governments. Thank you.
Great job, you guys. Thank you.
Thank you.
I gotta admit, I forgot my glasses and I only have my sunglasses, so who are you?
Kimberly Conley.
Oh, okay.